This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending October 29th, 2022. Our question this week is, what are stock options? The answer will be provided later in the video. This week, the market ended higher. The Dow Jones Industrial Average increased 2.59% on Friday and was up 5.72% for the week. The S&P 500 increased 2.46% on Friday and was up 3.95% for the week. The Nasdaq increased 2.87% on Friday and was up 2.24% for the week. Looking at the week, we can see that there were 11 up finishes versus 4 down finishes for the major indexes. On Monday, Tuesday, and Friday, all the major indexes finished up. On Wednesday and Thursday, the Dow Jones Industrial Average finished up, while the S&P 500 and the Nasdaq finished down. The new unemployment claims came in better than expected at 217,000. The Fed's key inflation gauge rose 0.5% in September. Pending home sales fell 10%. Mortgage demand is just slightly above half of what it was a year ago. Meta shares plunged 24% on Thursday, and the U.S. GDP accelerated at a 2.6% pace in the third quarter. New unemployment claims, a key inflation gauge raising, pending home sales falling, mortgage demand dropping, Meta shares plunging, and the U.S. GDP accelerating at a 2.6% pace in the third quarter are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up as the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What are stock options? Stock options are financial derivatives. They are contracts that gives the purchaser the right but not the obligation to purchase or sell the underlying stock at a certain price by a certain date. There are 2 types of stock options: puts, which can be considered a bet that the underlying stock price is going to go down, and calls, which can be considered a bet that the underlying stock price is going to go up. Stock options are bought and sold on options exchanges, particularly on the Chicago Options Board Exchange, or COBE. You can purchase or sell options through your online broker. Each stock option contract represents 100 shares of the underlying stock, so you must be aware that when you buy one option contract, you are actually dealing with 100 shares of the underlying stock. The one option 100 shares relationships gives you leverage over 100 shares for a fraction of the cost of buying 100 shares. Not all corporations, however, have option contracts, and the expiration cycle of stock options are generally monthly, quarterly, and for some corporations, weekly. The strike price is the price that the underlying stock can be bought or sold. That is the agreed upon price. The expiration date is the date when the contract expires. If an option is not exercised or executed by the end of the expiration date, it expires worthless. That is, its value goes to zero. Most option contracts, something like 90%, expire worthless. The Southside strategy uses stock options to generate cash flow. Do you know how to use stock options for cash flow? Do your stocks have stock options? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy them cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is the Southside Trading Watch List from the week ending October 29th, 2022. The strongest performer on the list this week was Teladoc Health Incorporated, ticker symbol TDOC, in the first column. It was up 3.79% on Friday and was up 22.97% for the week. Teladoc Health Incorporated provides a portfolio of healthcare services and solutions through virtual access. The services include various medical subspecialties from non-urgent episodic needs such as flu and upper respiratory infections to chronic complicated medical conditions such as hypertension, cancer, and congestive heart failure. Looking at a summary of results, you can see that Teladoc has decreased almost 68% year to date. I did not trade Teladoc this week, but I may trade it in the future. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 Index ETF SPY in 2022. The Southside Portfolio is up 0.99% versus minus 18.09 cent down for SPY, a difference of 19.08%. The Southside is beating SPY by just over 19% year to date. The cash flow generated by the Southside cash flow system for this week was 3.47% of the portfolio account value. The account value changed by 7.96%. Meanwhile, the S&P 500 ETF SPY changed by 3.94%. Bitcoin Watch. Bitcoin gained 8.16% this past week, but continues to be in a bear market. It is down almost 70% from its all-time high achieved in November 2021. I sold option contracts on 2 positions this week, 1 call and 1 put, that ranged from $35.35 to $42.35. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists, levels 1, 2, and 3. Level 1 being for beginners, level 2 intermediate, and level 3 more advanced investors and traders. The videos are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe